Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about JBT MAREL CORP quarterly report. JBT MAREL Corporation offers a wide range of technology solutions to the food and beverage industry across various regions. The company's services include equipment and software for processing, such as stunning, slaughtering, and chilling automated guided vehicle systems for material movement in manufacturing, warehouse and medical facilities, solutions for packaging, labeling, and filling services for industries including poultry, beef, pork, seafood, dairy, bakery, pet foods, and aqua feed high-pressure processing, pasteurizing, sterilizing, concentrating, and extracting solutions weighing, inspecting, and end-of-line material handling services. The company markets its products through a direct sales force, independent distributors, sales representatives, and technical service teams. The significant increase in JBT MAREL Corporation's stock price by over 18.52% in the past year can be attributed to several key events. The acquisition of MAREL by JBT Corporation was a major driver, with regulatory clearances and shareholder approvals paving the way for the formation of JBT MAREL Corporation. This merger created a positive outlook, leading to substantial stock appreciation. The company's strong financial performance, particularly in its second and third quarters of 2025, further contributed to the increase in stock price. Robust revenue growth, a healthy order backlog, and exceptional earnings that surpassed analyst expectations all played a role. Additionally, the company raised its full-year guidance, demonstrating confidence in its future performance. Analyst upgrades such as William Blair's outperform rating also positively influenced investor sentiment and contributed to stock price appreciation. Overall, these events have collectively driven JBT MAREL Corp's stock price increase, with the acquisition of MAREL and subsequent strong financial results being major catalysts. The primary drivers of revenue growth for a company can be attributed to several key factors. The acquisition of MAREL HF in January 2025 has been a significant contributor to revenue growth, with revenue enhancement synergies and MAREL's existing revenue also playing important roles. Additionally, higher book and ship revenue, improved manufacturing and supply chain productivity, increased backlog conversion in poultry, volume leverage, favorable mix of products, synergy savings, and incremental gross profit from the acquired business have all contributed to revenue growth. On the other hand, several factors have led to a decline in revenue. The reduction in U.S. research and development credits due to tax law changes is expected to reduce revenue by $1 million in 2025. Evolving costs of tariffs, higher pension expense, higher interest expense, loss on investment, and discrete items on income tax provision have also contributed to the decline in revenue. Overall, the company's revenue growth and decline can be attributed to a combination of internal factors, such as productivity improvements, and external factors, such as changes in tax laws and tariffs. The company's financial performance indicates a significant improvement in its ability to generate positive operating cash flow. In 2025, the company achieved an impressive $224.3 million in cash provided by continuing activities, marking a substantial increase from the previous year's $103.9 million. This upward trend suggests that the company is effectively managing its operations and generating sufficient cash to support its growth and investments. The company's debt level and interest expenses have undergone significant changes in recent years. According to the financial summary, total debt has increased from $1,252.1 million to $1,905.4 million, a rise of $653.3 million. This increase is largely due to the MAREL transaction and additional borrowings of $900 million drawn from the Term Loan B. Consequently, interest expenses have also seen a substantial surge, with a change of plus 504% from 2024 to 2025. The company's higher average debt balance and interest rates on additional borrowings are primarily responsible for this increase in interest expenses. Overall, these changes indicate that the company is taking on more debt and paying significantly more in interest expenses as a result. Management is optimistic about the company's outlook, highlighting several key strategies and expectations for 2025. The company plans to realign its reportable segments in Q4 2025, which will provide a clearer picture of its operations. Additionally, the acquisition of MAREL HF is expected to enhance the company's offerings by providing comprehensive solutions throughout the food production value chain. Financially, management expects the company to generate positive cash flows for the full year 2025 and have sufficient cash flows from continuing operations to meet principal cash requirements. Capital expenditures are projected to be between $90 million and $95 million in 2025. However, integration costs related to the Marel acquisition are estimated to range from $50 million to $60 million. Management is also keeping a close eye on global minimum corporate tax, Pillar 2, and will continue to evaluate its effects as more information becomes available. Overall, these developments suggest that the company is focused on growth, efficiency, and adaptability in response to changing market conditions. The company has a history of paying out dividends to its shareholders. According to the financial summary, in 2024 and 2025, the company paid out a total of $9.6 million and $15.7 million respectively. Specifically, on December 31, 2024, the company paid out $15.6 million in common stock cash dividends, and on September 30, 2025, it paid out $5.3 million. Concerns about inventory buildup and supply chain disruption exist. The company faces significant concerns regarding inventory buildup and supply chain disruption. The accumulation of excess inventory has led to write-offs totaling $300,000 due to restructuring efforts. Furthermore, the company's operating activities have seen a substantial increase in cash provided by higher purchases of inventory. Supply chain disruptions also pose a threat, particularly with regards to evolving tariffs and the potential impact of the Marel acquisition on supply chain operations. The deteriorating economic conditions, including supply chain delays and reduced material or component availability, exacerbate these concerns. That concludes the financial summary for JBT MAREL CORP. Feel free to comment below, and I will be happy to answer them when possible.